Good evening, and welcome to the AJP Northeast Asia market close. Korea rebounded on powerful gains in its memory chip leaders. China edged higher on policy hopes and energy strength, while Japan slipped as high bond yields continued to pressure major index heavyweights. The three markets ended the week on very different footing. Korea was a clear outperformer, with the KOSPI rising 0.88% as Samsung Electronics and SK hynix rallied on growing expectations for massive shareholder returns from the country's cash-rich chip makers. China moved more cautiously. The Shanghai Composite was up 0.18% in late trade as investors balanced expectations for additional fiscal support against persistent weakness in domestic demand. PetroChina gained more than 2% with oil prices still elevated by tensions involving Iran. Japan moved in the opposite direction. The Nikkei lost 0.36% as fast retailing and Mitsubishi heavy industries fell sharply, although chip testing giant Advantest managed to advance. Across the region, investors are still dealing with elevated US and Japanese bond yields, expensive technology valuations, and oil prices near their highest levels in weeks. The KOSPI closed up 60.36 points, or 0.88%, at 6,912.94, led once again by Korea's two dominant memory chip companies. Samsung Electronics jumped 3.87% to 281,501 after reports that its board would discuss a potentially enormous new shareholder return program involving special dividends, share buybacks, and cancellations. Samsung Electronics preferred shares surged even more, climbing 8.26% to 207,001. SK hynix gained 2.31% to 1,730,000 won, extending support from its announcement this week that it plans to buy back and cancel 40 trillion won worth of treasury shares. The contrast with the broader global backdrop is important. Rising bond yields have been pressuring highly valued technology shares worldwide, but Korean memory makers found a separate catalyst in shareholder returns backed by extraordinary cash generation from the AI chip boom. Seoul's rally today was therefore not simply another AI trade. It was also a capital return trade. Shanghai was positive but far more restrained. The Shanghai Composite was currently trading up 6.96 points, or 0.18%, at 3,910.68. Investors were weighing signals that Beijing could deploy additional fiscal measures against July data that continued to show weakness in domestic demand. The individual stocks also showed that this was not a broad risk-on rally. CXMT, China's rapidly rising domestic memory chip champion, gained 0.75% to 58 yuan as enthusiasm around strategically important Chinese semiconductor companies remained intact. PetroChina rose 2.09% to 11.22 yuan, benefiting from an oil market that remains elevated amid USS, Iran tensions and uncertainty over Gulf supply. Industrial and Commercial Bank of China slipped 0.13% to 7.465 yuan. The picture in Shanghai was therefore one of selective strength. Domestic technology and energy remained supported, while the broader benchmark advanced only modestly as investors waited for clearer evidence that fiscal support can revive demand. Tokyo finished lower, with the Nikkei 225 falling 238 points, or 0.36%, to 66,040. The headline decline again concealed a sharp divergence among major components. Fast retailing, whose enormous weighting gives it outsized influence over the Nikkei, dropped 3.7% to 73,460 yen and was a major drag on the benchmark. Mitsubishi Heavy Industries fell 3.11% to 3,928 yen, but technology was not uniformly weak. Semiconductor test equipment maker Advantest rose 0.93% to 35,690 yen, showing that investors were still willing to return selectively to AI-linked names after this week's heavy selling. The bigger macro pressure came from bonds. Japan's 10-year government bond yield remained close to multi-decade highs, while July core inflation accelerated and manufacturing orders strengthened. Both developments reinforce expectations that the Bank of Japan could raise rates again in September. Tokyo therefore ended caught between resilient semiconductor demand and a much less forgiving interest rate environment. So today's split was about catalysts rather than a single regional trend. Korea had shareholder returns and a rebound in its dominant chip makers. China had policy expectations and support from energy. Japan had to absorb pressure from rising domestic and global yields, even as Advantest resisted the broader decline. The key question now is whether company-specific catalysts can keep overpowering the macro pressure from bonds and oil. Next week will provide a major test, with Nvidia's results putting global AI spending and semiconductor valuations back at the center of the market. We will be back next week to see whether Korea's chip rebound can continue, whether Beijing's policy signals can give Chinese equities more momentum, and whether rising yields put renewed pressure on Japanese stocks. For daily Northeast Asia market coverage, please subscribe. Thank you for watching AJP.